Good evening, everybody. Welcome to the Asian Express by InTheMoneyStocks.com. My name is Nick Santiago. Today is August 11, 2013. We're going to look at some leading Asian stock indexes. We'll see where the levels are and what the markets are telling us. Right now, the Nikkei 225 index has really retreated pretty decently from the middle of July. It has pulled back pretty nicely. I'm expecting this index to get down to the 12,800 level. If I just pull this up right here, what you'll see is I think this is probably where it wants to make its way down to. Currently trading at around 13,615, but 12,800 is really where I'm seeing the first sign of support. That's going to come into this big level just underneath the 13,000 level, so traders should watch for short-term bounce around there. But until that happens, I do expect this overall important leading index to trade lower in the near term. Can it bounce a little bit? Sure, but ultimately should make its way down to the 12,800 level. There's going to be a lot of data coming out, I believe, this week from Japan. I believe they are having their GDP number. Also, you're going to hear more about Abenomics, which is their money printing way of propping up or inflating the stock market. So again, let's see where this goes, but I'm looking towards that 12,800 level in the near term. Next index that we do want to look at is going to be the Shanghai Composite. This is mainland China, and what you're going to see here is that this index is still trading below the 50-day moving average, although the pattern in the charts is still holding up. It hasn't really retreated. You put in a pretty solid low all the way on June 25th. We've had some lower highs from that time, so there is a chance for the Shanghai to push higher, although anytime price is trading below the 50-day moving average, also below its last important pivot, it should be noted, and this is also an index that doesn't look all that strong on the charts. So its maximum upside, in my opinion, would be around 2150, which would be this secondary black line here. But before that even happens, you have to get through this level. You also have to get through the 50-day moving average, which may require more consolidation in the near term. So be very careful with the Shanghai. I know they've released a lot of positive data recently that has helped the commodity sector as of late. But the reality of it is I'm not sure many people trust the data coming out of China anymore, and that's most importantly what you're going to have to watch for. So right now, again, it's hanging in there, but we're not seeing a whole lot of strength. Maximum upside in this index would be around 2150. I don't expect that, but you never know if it can happen. Let's go down the road a little bit and go right to Hong Kong. If we take a look at the Hang Seng Index, what we're going to see here is that this almost got up to our high right here, but it has come down. This could be making the starts of some bearish consolidation, and that would take the index down lower. Right now, there's going to be a ton of support around 20,630. So if by some chance price does get down to that level, you're going to watch the 20,630 level. There will be very good support, at least in the near term, right around that area. Should the Hang Seng make new highs, then I don't think it goes all that much higher. It probably stalls out right around the 2250. It might even be 22,550. So somewhere in that vicinity, just above 22,500, there still will be a wall of near-term resistance for the Hang Seng. So we don't want to make too much out of it or expect too much in that important index. Now we're going to shift gears a little bit. We're going to head over to India. We're going to take a look at the Bombay Sensex index, and what you'll see here is last week we put this line in. We said this looks like it's ready for a bounce. You did get that bounce, so we'll see if that bounce can continue a little bit out of India. If it does not, expect this double bottom low to get penetrated or at least tagged around this level. You also have a very big level around 18,000. So if this were to fall pretty sharply, you're going to wind up with another big level right around here, and that would be very important as well. But anyway you slice it or dice it, when I take a look at this, not seeing a whole lot of strength here, but maybe a little bit of an uptick from an oversold condition at best. Don't expect too much out of this important index. Let's go down a little bit, and we're going to move over to Taiwan. What we'll see here with Taiwan is Taiwan looks weak and very weak. I can't make much out of it. You have a 200-day moving average here, so there is some chart support, but ultimately Taiwan wants to come back and test this double bottom from June. I think you should expect that level to get tested. So ultimately, we're going to head right down to that 7,600 area. Maybe it's 7,700, possibly at best case scenario. I really wouldn't expect all that much, but just expect price to find some support in this vicinity, give or take between 7,700 and 7,600, but ultimately should get through that 200-day moving average. Let's go a little bit into the Singapore Straits Times Index right now. This is holding up very, very well. Chopping along, going sideways. Nothing really wrong here. Price has been able to get through the moving averages, but the maximum upside on this is going to be 33.26. So again, you're not going to look for much more than this line. Right around the 33.26 level, that should be maximum upside in the Singapore Straits Times. After that, look for some sort of pullback in the cards. Let's go over to the Korean Kospi. What we'll see here is that this one could not get above the 200-day moving average. It has pulled back, starting to make some sort of consolidation here. I'm not seeing a lot of strength, but where I do see some support would be around the 18,049 level. So keep that on watch right now. 18,049 would be some short-term support. A break of that, then this can go right back to double bottom. But right now, that will be the near-term short-term support level in the meantime. Let's go over to, we have one more here on the chart. Oh, we have Australia. Let's go over to Australia. This is an important one right now. I don't see much more upside in the Australian market until you really get through the 5,200 level. Could that happen? I suppose it has a chance. I don't see a lot of strength in this one. You had that wide range sell-off bar on the 8th of August, and now it still has inside bar consolidation. A lot of resistance on this one. First level would be 5150, then ultimately 5200. Don't expect all that much upside here. In fact, I would not pull past that this market wants to come down and roll over a little bit. So if price does exceed or break this the low from the 7th of August, please expect lower price, maybe into the 50-day moving average, possibly the 200-day moving average on the daily. And maximum downside on this one would be around 4,700. So this would be its maximum downside back on the Australian index. But lately, it's been behaving pretty well. So we'll see, have to watch this pattern. It could just be in a range for a little while longer. But do not rule out lower price ahead in Australia in the short term. Okay, I think I've covered everything I was on my charts here for the most part. So I'm going to leave it there for now. And again, we just do it real quick wrap up on all the Asian markets each and every week on Sunday evening. So which would be really Monday morning in the Asian markets. But thank you for tuning in, and we'll see you next week on the charts.